I think with regard to innovation especially, I think a lot of the banks are really trying to find out what is possible for banks, especially in the context of this emergence of all the disruptions in terms of technology, social, as well as consumer preferences changing very, very quickly. I think that they need to keep pace with these technologies while keeping track of all the regulations as well as the risk management guidelines and mandates that they have to fulfill. That regulators by nature are reactive, right? And I think that they don't really look at a long-term horizon about all these technology disruptions, but they're coming around very quickly and just making sure that they're also staying abreast of all of these developments that are happening in the industry. But there are several regulators that have become more and more proactive in terms of allowing some forms of innovation, not only in terms of, say, the delivery of technology within the organization, but also in the way that banks and other financial institutions relate with customers. What is very important to note with regard to mobile payments and all mobile financial services transactions is that there are different levels of maturity per market. And there are different levels of maturity per bank as well in terms of being able to deal with the customers. What mobile has really changed is the way that we deal with a customer segment of one, because the mobile is very, very personal to every single consumer. The mobile is almost the identity of the person, right? And so you really have to come up with a proposition, an offering that is very tailored to this one particular individual. And I think banks are used to coming up with consumer segments, but that's not even enough because you really have to speak to one particular consumer now. There are different consumer preferences in terms of consumer payments. Some consumers would like to do NFC, for example, or some other consumers wouldn't be bothered anyway. And I think that banks need to recognize there are different modes of payments through mobile, and they have to, as much as possible, serve these different requirements. I don't think that they will be displacing banks in the short to medium term, because the regulators will again come down and say, if you're going to do payment and cash carrying type of activities, you need to have a banking license. And I think that that is probably the great obstacle for all these disruptors to really eat into the traditional business of banks, especially in the payments space. Moving forward, we expect the banks themselves to build ecosystems with the telcos as well as all these disruptors. That might be the way to go forward in terms of being able to respond to the customer, but also to make sure that the banks are still part of the entire process of payments. I think the telcos are, frankly, probably in a more difficult position than banks, because their traditional business would probably be seeing major displacements as well in terms of how they source their revenues and how they sign up more customers. The banks are still heavily protected by the regulator, and the regulators are trying to keep the outsiders out of the financial services industry as much as possible. So the banks still have that, the regulatory backing at this point in time. Telcos really have to move much more quickly than the banks at this point in time, because they're being disrupted from more angles than the banking industry is. But I think the telcos as well as the banks really need to work together. The telcos providing of course, the infrastructure, but also the platform for some of the banks to move into the mobile payments and mobile financial services space.